I now hand the conference over to Mr. Chaudhary Karuturi, Executive Director, Apex Frozen Foods, for opening remarks. Thank you, and over to you, sir.
Thank you, Rituja. Good morning, everyone, and welcome to the earnings call for the quarter and half year ended September 30, 2021. Mr. Vijay Kumar, our CFO, and Mr. Durga Prasad, our Senior Accounts Manager, and Stellar IR Advisors, our Investor Relations Advisor, are on the call with us today. We have uploaded the investor presentation on the website of the stock exchange, and we hope you have had a chance to go through it. We will quickly take you through the updates for the quarter, and we can move to the Q&A after that. On the operations front, as we had indicated in the last quarter, our facilities continue to operate with little to no disruption. However, the ongoing shortage of containers, freight carriers continue to hamper our ability to grow our exports or sales. The situation continues to improve, but gradually. We are hopeful that normalcy would return over the next few weeks, for sure, as we understand the shipping lines provide more and more equipment. Global demand for shrimp continues to remain strong, with large parts of the developed economies beginning to return to normalcy. We are seeing a robust demand, both from the food service sector, the HoReCa clients, as well as the retail clients. The average realization increased on account of better product mix and stable shrimp prices globally. Additionally, our business with European Union has witnessed improvement this year, which is basically a higher realization market when compared to markets like China. And with regards to the U.S. market, specifically, both the food service sector and the retail sector has opened up, and the demand has been strong. In fact, most of our customers are looking forward for the deliveries to be made to them, so that their requirements for the holiday sales can be taken care. However, the persistent logistical crisis still continues to hamper their plans to a certain extent. As such, the demand is strong at this for now, and we are having products which are completed and we are still waiting for equipment support from the shipping lines. So there's on that front, the European Union market also shares the similar status as of US. Our product mix to EU also has been improving. Of course, we haven't yet started the ready-to-eat products to European Union, because the regulatory approval for the EU market for ready-to-eat has not yet been made available to us, which is a delay between the governmental authorities of the EU as well as the government of India. China, our shipments to China for the past quarter were zero, with regard to various trade barrier-related issues, as well as our focus to utilize the current capacity mostly for the US and EU markets in the present demand-supply situation. We would, of course, continue to look at the Chinese market when the market is in a favorable condition to the company, while during the peak arrivals, most likely in the year 2022, during the first quarter and second quarter. So for now, our focus continues to remain mainly on the US and the EU market. Now, coming to our financial performance, despite the second wave of COVID-19, the capacity utilization during the first half year of FY22 improved to almost 54% of our overall capacity, 29,240 metric tons, as against 41% in the full year of FY21. As production gathered pace on the back of our healthy order book. However, due to the logistical issues, which we have been repeating as a primary issue for the past few quarters, which translated into a lack of container availability and vessel space, our volumes sold were restricted. It was restricted due to around 86% of the production. That is dispatches of sales of 7,871 metric tons in the first half year of FY22. However, within our overall sales, we have been able to grow sales of higher value-added products, which are at a higher margin, the ready-to-eat products, thereby improving the product mix. The ready-to-eat sales formed almost 21% of the overall shrimp sales in the first half of the current fiscal, which is a significant improvement over the 15% share in FY21. The average realization in Q2 FY22 improved by 8 to 10% when compared to year-on-year as well as quarter-on-quarter, on the back of improving product mix and better global prices of shrimp. This helped us post a growth in total income in Q2 FY22, despite marginal fall in sales over same period of last fiscal. While the overall availability of containers is improving slightly, we are still having to pay very high premium rates for reserving our containers for shipping our finished products. This is slightly offset by increased realizations as well as the support being received from our customers to a certain extent, to the best extent possible, by supporting us on additional freight costs. As a result, on an overall basis, the EBITDA margin for the quarter remained in the expected range. So with that, I now request Mr. Vijay Kumar, our CFO, to take you through the brief highlights of our first quarter of current fiscal performance. Thank you.
Okay, thank you. Thank you. Good morning, everyone, and hope all of you are keeping safe. I shall brief you on the financial highlights of the quarter gone by. The price situation notwithstanding, our overall capacity utilization improved to 54% in H1 FY22 from 41% in FY21. Amidst the challenging sea transport situation, shrimp sales volumes in Q2 FY22 stood marginally lower on year-on-year basis at 3,542 metric tons, but grew by 9% in quarter-on-quarter. In H1 FY22, the shrimp sales stood at 6,804 metric tons as against almost 6,868 metric tons in H1 FY21. Most importantly for us, the share of high-value ready-to-eat products increased to 21% in Q2 and H1 FY22 versus 15% in FY21. As a result of the improving product mix and stable prices, our total income increased by 2.3% on year-on-year basis and 18.6% on a quarter-on-quarter basis to rupees 2699 million in Q2 FY22 and by 2.6% year-on-year to rupees 4974 million in H1 FY22. As far as the profitability is concerned, EBITDA margins were impacted considering the challenging environment comprising mutual dispatches but higher production and higher export expenses. However, the increased costs have been offset to some extent by better product realization in Q2 FY22. The resultant EBITDA for Q2 FY22 came in at rupees 394 million and accounted for 14.6% EBITDA margin. With regard to H1 FY22, the EBITDA degrew by 19% year-on-year to rupees 502 million and margin came in lower at 10.7% versus 13.5% in H1 FY21 due to subdued profitability in Q1 FY22. Depreciation and interest costs remained at reasonable level when compared as a percentage of income. The PAT for Q2 FY22 stood at rupees 220 million, lower by 13% year-on-year, but growth of 56% quarter-on-quarter. The PAT for H1 FY22 stood at rupees 253 million versus rupees 337 million in H1 FY21. The geographical breakup of sales in Q1 FY22 as follows. 79% came from US, 21% from EU. With that, I conclude our opening remarks, and now I request the moderator to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, to ask a question, please press star and one. The first question is from the line of Nitin Awasthi from InCred Equities. Please go ahead.
Hello, sir. Congratulations on a great set of numbers. I would just like to understand the export incentive bit first. So how much of it was booked in the current quarter, and how much was it pertaining to the current quarter, or if not booked, then how much is outstanding and how much will be booked in the forthcoming quarters?
Yeah. We have booked export incentives duty drawback only this quarter, and the net export benefits 3.53 crores this year we have booked.
No. So pertaining to this quarter, have you booked the rod tap?
Rod tap. Sorry,
Hello?
Hello. Okay. Rod tap,
yes.
Actually we have not accounted this quarter because, there are budgetary controls as per notification.
Yeah. So you have, sorry, yeah, your question was about the new scheme announced by the Government of India, which the company has not considered as the Government of India also has stipulated that the availability of the scheme is subject to funding on their part.
Mm-hmm.
And as such, the company has not received any of the scheme benefits, and hence we have decided not to account for it, and we shall do upon receipt basis going forward. So as of now, none of the incentives the new scheme of remission of taxes, duties, and on export products has not been accounted for since January 2021 as per the notification given by the Government of India. So we have not accounted anything from the new scheme. Yeah. So we will do it as we receive it because of the ambiguity in the with regard to the allotment of funding, etc., with the Government of India.
Noted, sir. And how much is the net duty drawback which was booked this quarter?
3.53 crores.
Okay. And the hatchery sales for the quarter?
Around 3 crores.
Sorry, hatchery sales.
3 crores.
Around 3 crores this year, hatchery sales. This quarter.
Okay, sir. Now, moving on to the operations, what we are seeing on the ground, at least from the news that we are hearing, is there's going to be a shortage of material. And how much of that is true for us to have a good quarter, good coming quarter? And to mitigate that, what I see is that we have a good inventory build-up of around more than 200 crores. So can we expect the next quarter to be better than this quarter? I mean, Q3 to be better than Q2, given that logistic issues and all are also, smoothing out?
We wouldn't be able to, really say that, as we could have noticed in our opening remarks too, that it is evening out, but at the same time we still continue to have issues with regard to equipment supply, which we meant as container support from the shipping lines. We continue to pay significantly high freight costs too. So yes, there are issues with regard to supply at this point, but we are continuing to get our supply. Of course, which is at a higher cost in general. Our inventories, whichever are there, are taking care of pending contracts which are already have been long overdue for shipment. As we await for equipment support from the shipping line, we continue to face the same challenge like we have been facing since the past 2 quarters of quite some volumes of products which are completed, however, awaiting equipment. It's just that the levels of inventory comparatively have come down compared to the first quarter and the last quarter of last financial year. Compared to them, it is, of course, lower as such with regard to volumes. We could definitely utilize our Q1's inventories reasonably well for our Q2 shipments. We continue to monitor the situation, and as the equipment support comes into our way, we will definitely be looking forward to utilizing more of our inventories along with the raw material which is available in the market. However, we would not be making any comment at this point with regard to how the Q2 is going to be, or as such at this point. We are, of course, in the middle of it's not appropriate for us to make comment at this point for that. But we continue to monitor the situation, and definitely we will be utilizing our inventories as well as the raw material available at our disposal.
Okay. And lastly, from my side, on the tax rate front, could we expect a steady state rate of the new regime to continue now, or will we still have deferred tax of the previous years which we are going to utilize, hence we are going to stick with the old regime?
Sorry, can you repeat your question, please? Sorry.
The tax rate, sir. My question was regard to the tax rate. What would be the steady state tax rate for the company going ahead?
See, tax rates are just the government of India, and next year what we can assume depends on government notification, right? If it assume the same rate will continue.
No, but we are under the new regime. We have been the same for the past since last financial year, right? We have not made any changes to that.
Okay. So you're still sticking to the new regime only. Nothing apart from that.
No.
Noted, sir. That's all from my side.
Okay. Thank you.
Thank you. The next question is from the line of Raj Krishna Bharadwaj from Yes Securities. Please go ahead.
Good morning. So I see that on operational front, overall capacity utilization improved from 41 to 54%. What is the expected capacity utilization in the next few quarters?
Raj, the capacity utilization, of course, is more dependent on the availability of supply of the product. As we have just mentioned to the previous caller, and like he has rightly asked, there are certain supply issues which are being looked at in the current quarter, and so we would be watching it carefully, and for sure that will be the deciding factor for the optimum utilization, capacity utilization. However, at this point, we are hopeful that we continue to utilize over and above 50%. Our goal also was to, for the whole year, entire year, we were looking at 50% plus. So that's the minimum which we were looking at. We are hopeful, but of course subject to supply conditions, because capacity utilization is totally dependent on supply available. So we are monitoring the situation. So we will look forward for supply to be improving, if not in the Q3, maybe by Q4. So we are just hopeful. So that will be taking, if any further addition of capacity utilization will take place, that will depend on the supply.
Okay. Thank you.
Thank you. Reminder to the participants, to ask a question, please press star and 1. The next question is from the line of Ashwini Agarwal from Ashmore Investment Management. Please go ahead.
Good morning, Mr. Chaudhary. It's a good set of quarterly figures despite the challenges, so congratulations. So just, taking on from the questions from some of the previous participants, what is the amount of ROT, DEP benefits that are due to you? I mean, how much have you filed for that you expect to receive, subject to budgetary constraints, et cetera? How much of it has been accrued to you, and how much have you claimed so far as of 30th September?
So Ashwini, as I had mentioned to the previous caller, we have not claimed any as on September 30th, 2021. However, what are we entitled for? If that is what is your question, that is roughly between 14 to 15 crores. If that's what I think. Yeah, it is approximately around 14 to 15 crores is there, but none of which has been touched yet. As I said, because of the issues on the government side and also the market conditions, etc. With regard to so that scale, we haven't claimed any as on date. So as on September 30th, sorry. So we will be looking at it in the Q3, and we would be accounting for it. When we account for it, we'll definitely be showing presenting it in the financials. We'll definitely be updating as for that.
Okay. And sir, could you help us understand why is there a supply issue of raw shrimp? I'm assuming you are alluding to. Is it simply a seasonal factor, or is there something else at play?
No, the first thing is, this is as you know very well, it's a livestock industry, and we have had the disease also plays a role. Weather conditions, climatic changes, all these play a role with regard to shrimp aquaculture across the country. One of the key part was 6 to 8 weeks ago, more towards in the end of second quarter mostly. We have had a significant amount of smaller sized harvests which have happened, and they also happened in the earlier part of the Q3, which basically is nothing but a significant amount of our medium and large sizes getting wiped off from the market table. So the primary producers, farmers, of course, most of them, some of them, quite some of them have gone for restocking again, and they continue to grow and harvest their shrimp as we speak. But one of the major issue was there was a premature small size harvest which had happened towards the end of second quarter. That was one of the reasons why there is a little bit of gap in supply. As we still continue to operate our facility, we continue to get our supply. There's no issue, but it's not as we would have normally seen in the past. So that will be improving hopefully over the next few months. So that's how we are looking forward to. And also the demand in general is also higher now because of the overseas demand for the requirements. So naturally there are players, quite a number of players in the market too for the same product. So it's a combination of factors. It's not entirely just such as a shortage, but it was because a lot of premature harvests have happened. So.
Okay. And sir, last maintenance question on financials. The depreciation figure has come down quite significantly by almost 25% compared to first half of last year or the same quarter last year. Why would that be, if I could understand?
Let me explain. Last time we have new client and we have capitalized everything. So that's why there is the higher depreciation. Now we are that we charge an net asset basis. So that's why this quarter something reduced actually. Hello? Yeah.
Okay. All right, sir. All the best. Thank you for the update, and I'll come back with more questions.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and one now. The next question is from the line of Nisarg Vakharia from Lucky Investment Managers. Please go ahead.
Yeah, good morning, everyone. Sir, you were explaining the demand-supply situation just to the previous caller. Just to refine my understanding, I apologize if my question is a little naive. But what is the reason that you said that the smaller shrimps have been produced more? Is there some technicality to this, or it's just a seasonal thing?
Yeah, see, sir, I have also informed just the previous caller also that there are multiple factors which impact livestock growth. There were weather-related conditions, climatic changes. Now, you also see, cyclones and excessive rains. Along with it, disease in some parts of the country also has an effect on the growth of the shrimp. So naturally, the farmers or the primary producers tend to harvest in small sizes or prematurely. So there are multiple reasons for different areas. It's not like the entire country has one problem or that entire state of Andhra Pradesh has one problem. So there are different reasons, but most of it, of course, was climatic conditions as well as in some areas it was also disease which played a role for premature harvests to happen at that point of time.
Okay. Sir, my second question is that, from 2018 onwards to today, there has been like the business has not grown for us significantly, and of course there are several reasons for that. What I wanted to ask you specifically is that in this time period of the last 3-4 years, have any other countries gained market share against the expense of India into the primary regions of export, which is the US, China, and EU?
If your question was specifically to the Indian exports being stagnant and not growing significantly.
Yes.
At the expense of India, if any other markets like Thailand, Vietnam, or Ecuador growing their exports, that has not really been the situation. Yes, people, the different countries have opted for, they are focused on different end markets. So until 2 years ago, Ecuador was the number one supplier for China, and India was the number two supplier for China. However, in 2021, because of the pandemic and all these logistics issues, etc., and certain restrictions and non-tariff barriers within China, from China, the country of Ecuador has focused more on US. But does it mean that they have taken away India's market share? Well, not really. India still continues to be the number one shrimp supplying nation in the world as of now, and because of the availability of the large scale of farming which happens across the country, and with newer areas also being added. As such, to answer your question, there is no immediate threat for India to lose its market share to somebody else. However, based on the pricing conditions, logistical conditions, etc., for sure, companies like us, I wouldn't be able to talk on behalf of all the companies in India, but at least companies like us would be focusing to the respective markets where they tend to be of a better benefit to the company. And we are pretty confident that most of the other companies also would be doing the same, as the focus for any company would be to look at that market which provides better realization and better opportunities. So that is the status as such. India's market share to China has not come down drastically because of some lapses on behalf of India, but more because of restrictions by China, not just on India, but several other countries, including its number one supplying nation until a year ago, which was Ecuador. So that is how the market shares keep changing for Indian products. But overall, as a shrimp producing nation and exporting nation, India continues to focus mostly on US as its largest market, and as well as EU and other countries. Even now, there are exports to China also happening. It's not that they are totally zero. It's just that our company, for the last quarter, basically we didn't have any exports to China, and this would keep changing as the market dynamics keep changing. So, but however, as such, our company have always focused mainly on US and European Union. We would continue to do that even going forward.
And the US market has continued to grow in terms of volumes year on year, approximately by what percent?
Well, the volumes this year, there seems to be quite a growth, which we would be knowing more towards the end of this year. That is because our exports to China considerably having been reduced. On that basis, the exports to US should be looking at a growth. But like you rightly asked in your first question, so the exports to USA were pretty much stagnant over the past 1 to 2 years. But this year, 2021 especially, it is growing. I'm sorry, we don't have the number exactly, precisely, but there's been a good growth to USA. But the key part for India is not about growing USA at the expense of reducing its exports to China or some other market. The key part for India will be to grow its supply to take care of all the respective markets, whether it is China, European Union, or USA. So that will be the important part, which of course companies along with the industry along with the government departments are working in that direction, and we should see how that will be happening over the next 1 to 2 years as improvement of better supply within the country, so that we could continue to play a leading role to most of the export markets. So that's how it is.
One more question, if I could squeeze in, sir. I don't know if Ecuador was a very relevant discussion, from the growth journey of Indian shrimp exports from 2000 and let's say 12 to 2017-18, or maybe we were not aware of it. But has Ecuador become relevant over the last 2-3 years? And how big a threat do you think it is? What do you think can be the production or the demand supply, mismatch because of Ecuador being relevant now?
Ecuador has become relevant only in the year 2021.
Okay.
And in the US market. That is only primarily because of the issues being faced at from China. So will it continue to grow? Well, it depends on that country's supply conditions. Is Ecuador a threat to India? Well, not really, because India's production definitely is at a much larger scale compared to Ecuador. Yes, Ecuador continues to have an advantage of shorter sailing period to the US market when compared to India, which is having anywhere between 4 to 6 weeks of sailing period, while the Ecuadorian ship industry has to deal with only with 1 week to the US market. So that sort of logistical advantage definitely is there for Ecuador. But at the same time, we also have to make a note that Ecuador's primary market for the past 10 years almost, 7 to 10 years, has been China. And it is only because of the restrictions from China in the year 2021 has made it to focus towards USA. But for sure,
these restrictions from China are primarily because of what reason, sir, you said?
Sorry?
The restrictions that China has imposed is primarily because of what reason?
COVID-19.
COVID. Okay.
Yeah, got it. So,
great.
So
thank you so much, sir.
We put restrictions on Ecuador and then also followed to India. Yeah, thank you.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Dipesh from Equitas. Please go ahead.
Yeah, hi, good morning, sir, and thanks for taking the questions. Sir, if you look at the overall Indian shrimp exports and we look at your numbers and other listed companies' numbers, there seems to be contrast. So it seems that some of the companies on the eastern coast are losing market share to the companies on the western coast of India. So just wanted your thoughts. When do you think this situation will ease on the eastern coast, and will you be able to gain back the market share that you seem to have lost this year?
Sorry, you said companies on the east. I'm sorry, you said something.
Yes, you said last quarter, I think you told that on the eastern coast, the challenges of the container availability are more severe than on the western coast, right? So overall, the Indian shrimp exports are like showing a very good number. So somebody is exporting, right? So, but it is not reflecting in your numbers or the other listed entity in the eastern coast. So how do you think who is exporting, and are you losing market share to the western coast guys?
Not really. I mean, we will speak specifically about our company. We are not losing any of our market share to anybody else as we continue to deal with our customers for many years, and we continue to grow our business with them as such. And we believe it is the same situation for other companies too on the East Coast. Now, equipment support, that means containers, were an issue, and they still are an issue. It's not that the problem has totally been eased out, and we still continue to pay almost 450 to 500% of our freights which were prevailing pre-pandemic levels. So we still continue to have issues, but like you said, yes, wherever the equipment has been available, the exports have been growing from that area. And if you remember correctly, even our company, we have informed during the last quarterly call that even our company has been doing shipments through the West Coast too. I mean, based on wherever we could send out the shipments from. So it is an ongoing situation. The demand as such has been higher for sure compared to last year, and hence naturally the opportunity to ship is also increased for other companies. But does that mean that the East Coast companies or our company is losing its market share? Not really. We continue to operate, and the more opportunity we can get to ship, we will be able to do for sure much better. So we are currently working or doing our production under restrictions because of the logistical issues as such.
I got it, sir. Sir, and on the US part, the US is like the demand is growing at a very good rate. So just wanted to your understanding that is there actual demand that is growing, or the distributors are building inventory that may hamper the growth next year?
Well, the demand as such has been higher post unlocking of the US market after they doing away with lockdowns, and rather they opening up most of the food service sector coming back on track. And actually the demand has been picking up very good. It is being maintained. Right now the customers are looking forward for the delivery, which we have mentioned even in the opening remarks. They are looking forward for their deliveries for the holidays, which are very much required for them to conduct good business. However, of course, it will be difficult for me to make any statement of how the holiday sales will take place, which is over the next 6 to 8 weeks. So I won't be able to say that at this point, but they want to start up. And also the opening of food service really helped in the demand. So next year, will it taper down? At least we wouldn't say that it will be growing significantly from here, but at least we are definitely hopeful that it will be steady as such, because everybody is back on track and everybody is looking back to even consume at restaurant chains, and it's just no longer only retail functioning like how it had been in the year 2020. So things have definitely improved in 2021, and we are hopeful that with all these vaccinations and getting better in the pandemic situation, 2022 will continue to be maintaining like this for sure, because of all the reopening of all the establishments that we have.
Got it, sir. Sir, and if I look at your other expenses on a per kg basis, they seem to be flattish quarter on quarter, but the freight costs have actually increased. And you also talked about that you have moved your containers from like East Coast to West Coast wherever possible. So just wanted to understand, like, how have you managed this freight cost in this quarter, and have you moved your customers to FOB basis that you were talking about in the last quarter?
Regarding the freight costs, we were able to, of course, which we have mentioned even in our last quarterly con call, that we have been getting some support from our customers also. That continued through the Q2, and some of the shipments even in Q3 have the support. As we stated, it is some support because it's not that the entire increase in freight costs is being taken care of by the customers, but they have been supporting quite well. We thank them awfully. And at the same time, the market raise also has factored in this additional freight costs, and thereby the new pricing which is being at which the current market is running is definitely also factoring in this higher freight costs. So that way, we have been definitely supported by our customers overseas, both in US as well as EU. And your second question was about incentive. Sorry, I don't get the second question.
Sir, like, I just want to understand, like, your shipments continue to remain on a CIF basis, or have you moved some of the customers to FOB basis that you're talking about last quarter?
There are no shipments as of now which have moved to FOB basis, and like I have just mentioned, the customers are willing to work with us on this part, and they also understand the situation, and hence they are willing to take part of that additional freight increase. Thereby, the end consumer will be dealing with the added cost, and as such, our customers are willing to support us, and they are continuing to support us for the past more than a quarter, and they continue to support us even in Q3 at this point. So there was no need to discuss with them about FOB basis because they have come forward very well in supporting our company specifically, and also we hear that other companies in the industry also are being supported. I don't know to whatever each of those customers has to. So that way, there has not been an issue with regard to FOB. Since the customers are willing to pay for the additional freights, I don't think we also have to worry. This was the situation which developed over the Q2 and also Q3.
Got it. Understood. So lastly, just wanted to understand, like last year you booked the MES incentives in your books, right? But you still not received that number, that amount. So just wanted to understand, like, will you be provisioning that in the coming quarters? So how is the order pressure and all those things, if you can talk about it?
Actually, with regard to MEIS, specifically, there are some, of course, last year's dues, last year's licenses also which were pending, and some which were of the previous year too. One of the main reasons why we haven't yet basically transferred it or rather sold those licenses is because of also the market conditions. As the current market is not in favor of, rather it is running at a discounted rate at this point. It's a little bit lower, and hence we have decided not to sell our scripts yet into the market with regard to MEIS specifically. So we will be mostly doing it during the Q3 and maybe it may even go into Q4. We will do it based on the market situation with regard to the sale of MEIS licenses pertaining to the earlier period.
Okay, so you'll be selling the scripts, but there will be no provisions, right? So that's what just trying to understand.
No, we have already. There's not been because we have already claimed it as an income till the end of September last year, if you remember.
Okay.
Yeah.
Okay, got it. Okay, sir. Thank you very much.
So our company has claimed it, just for your information.
Got it.
Okay.
Yeah. Thank you.
Thank you. The next question is from the line of Vincent Andrews from Joseph Financial Services. Please go ahead.
Hi, good morning. Most of the questions got answered. Only one question I have. So can you please share the average realization in dollar terms? What was it for Q2 and average farm gate price also?
Sorry, average realization, what was your
Average realization of shrimp in export, in US in dollar terms?
It was $9.84 per kilo for Q2.
9.8, right?
9.84. Yeah, 9.84. Yeah.
Okay. And farm gate price average?
The farm gate price is as
325 per kg.
325. Right. So because of the ocean freight rate increase, any percentage you have got included in this $9.84?
Sorry. The additional freight cost has also been included into that 9.84 per
Okay.
kilo.
How much it can be if we can separate on an average basis?
Well, actually, it depends. 9.84 is based on the sales which have happened in Q2, which are pertaining to the orders and subsequent support by the customers, which are mostly from Q1. So it is basically a accumulation which happens. So for 9.84, one minute, freight cost.
Does that answer your question, Mr. Andres?
Sorry. I'm waiting for the answer.
Sorry for that.
Yeah, that was around 35 cents per kilo, approximately, additionally, which is also being, of course, supported by the customers. So it's being taken care by the customers.
Okay, 35. Okay, and how much we can, because of the value addition, how much it will be in 9.84? So going forward, the value addition from 20% will increase, we expect?
Sorry?
Any value addition, currently it is 20% of the products you sold. So, will it increase in the coming quarters?
The value addition capacity for now, we are utilizing it at its optimum. Even if there is an increase with regard to production capacity, it will be marginal, because so we will continue to maintain this 20% plus 20 to 25% of our through the year. We will continue to maintain this with regard to our sales of the value-added products. So that is continuing to be at 20-21%. It's not going to increase significantly higher because we are already utilizing our capacity to the optimum.
Okay.
With regard to ready meat.
Okay. Okay. Thanks for that. That is from my side. Thank you.
Thank you. Next question is from the line of Nishit Jain from Prasad Investments. Please go ahead.
Good morning, sir. As you informed before, the ROTTEP, which is yet to be booked, is close to 14 to 15 crores. So just wanted to recheck. It is from 1st Jan till September, right? For the 3 quarters is this amount?
Yeah, that's we are not booked. I think I have mentioned we are not booked.
Yes, you have not booked it, but it is yet to be booked, and you will be booking it at appropriate time as in with company suits.
On the receipts. Yeah.
On the receipts, right? Okay, thank you. And second point, just wanted to check with you. As you had mentioned in the previous call, that the raw material price, the farm gate price, was around 289 rupees in the first quarter, and this you have just now mentioned is 325 rupees. Is that right?
The first quarter was 289 rupees, and for Q2, yeah, it's 325 rupees.
Right. So there will be an impact on the margins for this, or it would be passed on ahead?
Well, at the same time, the product realization, like the previous caller had asked, for Q2, it was 9.84.
Right. And previously, I guess it was $9.
$9.1 per kilo. So it goes in tandem. So
okay. Okay. And one more thing, as we say that our net profit margin, if you can see, for the half yearly is close to 5.5%, and though we have not accounted the RODTEP, which is also around 2 to 2.5% going forward. So can we expect the net profit margin could be around for 7.5% or 8% for FY22? Any guidance?
Well, here you are trying to ask a question based on the receipt of the scheme of ROTDP, which, as we have already said, we would be only accounting for it upon receipt basis, number one. Number two, of course, we are continuing to work with our customers by looking at for working with higher realizations, and subject to costs involved, we look forward for better margins for sure on at that level basis. But in the current year, with this logistical crisis, we don't really expect, and also supply-related issues, which we see marginally here in the current quarter, and we don't really see a significant further increase. But ROTDP benefit is subject to receipt basis. So please understand, it is also, we wouldn't say totally that we will receive it entirely in Q3, or maybe it could go to Q4. It's all based on the situation with the government and the situation with as they release the scheme, we would take it into consideration.
Sure.
So please understand it is subject to.
Yeah, no, got it. And there is a significant increase in the provisions, if you see, from 13 crores for as on March 31st, and which is reported now is 27 crores. Can you throw some light?
Yeah, sorry, wait, which one is it?
The provisions, as mentioned in the March, as on March 31st, was 13 crores. And if you see the provisions mentioned for September quarter, as on September quarter, is 27 crores. So, what exactly is that?
The 13 crores for March, which I'm sorry, I didn't hear you. I'm sorry. With the 13 crores to 27 crores, which one is this? March?
The provisions, what you have mentioned, as on March 31st.
Sorry. Vijay Kumar.
Yeah. Okay. Yeah, this year, all the postal freight charges have been increased, and other, taxes payable, anti-dumping duty, some additions are there actually. So that's why there's a difference, mainly due to postal freight payable.
Okay, sir, got it. That's it. Thank you.
Thank you. Participants, you may press star and 1 to ask a question now. The next question is from the line of Nitin Awasthi from InCred Equities. Please go ahead.
Thank you for the follow-up. Just wanted to understand something. So you said contracts are not moving to FOB, but if we understand the RoDTEP scheme, doesn't it dictate that all contracts have to be on FOB for RoDTEP?
Mr. Nitin, any government of India scheme, for the calculation of that scheme, it will always be FOB basis. But what the earlier caller was specifically asking was moving on based on one of the responses which our company has given for the con call of Q1. He was asking us if we are moving our terms of shipment from CIF TDP basis to FOB, which I have mentioned that no, we are not moving because the customers are supporting on the freight terms, and hence there is no need of really moving to FOB basis shipment terms. You are asking a different question about Government of India schemes. It is on, isn't it on FOB? Yes, it is always on FOB. All schemes, NEIS, drawback, ROTDP, everything is based on FOB value. So the question earlier, for which we have answered, is not about the benefits, how the benefits are calculated by the government. It was about the terms of shipment which we are doing to our customers. I hope you got that.
Mm-hmm. Yes, sir, noted. So we are going to continue with CIF, but the accounting for the ROTAP scheme is going to happen on FOB. Is that correct?
No, the ROTAP scheme, the NEIS, drawback, all those incentives are only on FOB value.
Got it, sir.
They're always on FOB value for the past many years, and they'll continue to be the same.
Got it, sir. And so there was some news on the TMA, Transportation, Marketing and Assistance scheme for the agricultural commodities being extended to this year itself. Is there any benefit of that which the company is expecting to accrue?
Not yet at this point. We are still working on those details. So we haven't yet considered them yet. So we would let you know.
Okay, but they look like they could be coming in this year, or is it like still too far-fetched and it's still on the table itself?
We are actually looking at it. We are still working on it. As I said, we will not be able to comment at this point. For sure, if we have some news about it on our next call, we will definitely give you information.
Okay, sir. Got it. Wanted to understand some more clarity on the numbers which I had previously asked. And you had said you had done 3 crores of sales for the hatchery business. Was that for this quarter or the whole half year?
No, this quarter.
Wow, so that's a substantial jump. So you were expecting this figure to go even higher in the future? With the addition in hatcheries segment and all the work in progress reaches towards the hatchery segment?
Typically, the feed sales will be increasing quite high during the Q4.
Mm-hmm.
Because that is most of the time the feed sales will be stocking of shrimp happens across the country in aquaculture, especially in the southern states during that period. So we should see. Of course, we wouldn't be able to give you a specific number at this point. We definitely are looking forward for a better sale during Q4. We will keep you posted as they happen.
Noted, sir. And so the export incentive was 3.53 crores again for this quarter, and this is only the net duty drawback, correct?
Yes.
Yes, net sir. Yeah.
Okay. And so lastly, your competitor has been exporting a lot of product to Canada, and Canada is not a market that we normally talk about. So if you could just shed some light on that. So how big is the Canadian market? Is it just opening up for exports of Indian produce? Is it as big as the US market? Whatever insight you have, because we couldn't find anything anywhere else.
We wouldn't be commenting on what competitors do, but however, we are open to all markets. We have also been doing with Canada in the past, and we will continue to explore the opportunities and do as they come our way as such. And we continue to grow our strengths in the countries and the markets where we are present. And yes, as such, whenever opportunities come, whether it is Canada or Australia or the Middle East, we will definitely look at it and we will continue to grow such markets. So, yeah.
Any idea how big this market would be currently?
Sorry?
Any rough estimates of how big this market could be currently, Canadian market for shrimp import?
It's a good market. It's a good sized market for sure, but definitely it is not as large as the US or China or EU as a whole. But still, definitely it is a good market. And we, as I have mentioned, we have also been doing there in the past, but in the recent past we have not done into that market. So we will definitely do when any opportunities come our way. We will be considering that market too. It's a good sized market, but not as large as the top 3 markets in which Indian shrimp industry is focused on.
Okay, sir. Noted, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I would now like to hand the conference over to Mr. Chaudhary Karuturi for the closing remarks.
Thank you, Rituja. Thank you very much for attending our Q2 H1FY22 con call, quarterly call. And we hope that you all keep safe. And for any queries, any further clarifications, you can always reach out to us on the email address ir@apexfrozenfoods.com. Thank you very much and have a good day.
Thank you. On behalf of Apex Frozen Foods Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.